oil is at whatever, $60 or 65 on Brent-ish. S&P's at all-time new highs. Bitcoin's at 57,000, et cetera, et cetera. So you always need to look at markets together, and you need to look at markets relative to each other. So saying that, OPEC is sitting at home and seeing that the price is high, whatever that means, I don't think should enter into people's views or calculations about what that number is, because high is relative. It's got nothing to do with like 60 or 61 or 58. It's relative.
I suppose all things relative, as you say. The relative position there is that high is in the reference to the potential for shale or other higher cost producers to return at these prices as they have in the past, and so possibly challenge OPEC plus market share while they are keeping 6 to 8 million barrels off the market. So in that relative sense, it's a question of, does OPEC add supply back in order to taper the price and taper the higher cost producer returning?
Yeah, but I think basically, again, if you look at shale, people were saying, $50, I think it was $45, first of all, WTI, shale's going to come back. And now it was $50, shale's going to come back. And then it was $55, shale's going to come back. And now it's $60, shale's going to come back. And I've been saying there is no shale, it's not going to come back. And what's happened? Shale hasn't come back. So maybe they'll wait until we get to $70, $75, $80, and then we'll see them come back. But the reason is not through a lack of willingness or a lack of it's very simple. Basically, they don't have sufficient funds to grow. And why? It's because their business model doesn't attract the money. And why? Because basically investors, whatever you want to call it, realize that their model doesn't work and is not going to pay any kind of reward or whatever. So shale will continue, like walking dead companies. But as to grow, I think is a very difficult proposition.
Okay, one area that could grow is Venezuela. Let's bring in Jose Chalhoub, political risk and oil analyst sitting in Caracas. Jose, thank you for joining us this morning. Politics aside, which of course is a very big inhibitor perhaps, but what is the likelihood or the outlook for Venezuela's oil production to recover and participate in the world in 2021?
Thank you, Sean. Thank you very much for the invitation, and my regards to you and on the two panelists. Well, it's my pleasure. Well, I had the experience of working with PDVSA from 2004 until 2016. I saw and I experienced the crash of Venezuela's oil production, which was in 2004 at around 3.3 millions of barrels per day, and now you can see the destruction of Venezuela's oil production, which recovered a little bit at the end of January at around 500,000 barrels per day. But it's unlikely. It's unlikely that for Venezuela, Maduro said these days that he wants PDVSA, the state-oil company, to lift up our production to 1.5 millions of barrels per day, which is totally unlikely, because if you don't have massive multi-millions of dollars of investments in trying to recover our decayed infrastructure, talking about refineries, which is, our refinery capacity is completely down. Venezuela was one of the largest refining powerhouse in the world. Now we're not reaching not even 200,000 barrels per day of refining capacity of processing, and we even have to import gasoline and other products from Iran, which Venezuela is doing right now. And
it's a long way. It's a long way for Iranian gasoline to travel.
Sure, and the gasoline. I've been consuming Iranian gasoline recently, and the quality of that gasoline is not. It's not efficient, and it's causing very serious damages to all of, vehicles here, to all the cars here. So it's not, it hasn't been the best decision to import gasoline from Iran, but it is the last recourse for Maduro, and due to the political and geopolitical alliances that, as everyone knows, have existed between Iran and Venezuela ever since Chavez came to power, which it's stronger than ever right now in between both countries. And talking about the recovery, or I don't know, the outlook for PDVSA this year, and unless there's a political change here, I don't think that the situation of PDVSA will change much. You need to have at least 100 billions of dollars to invest in, the whole infrastructure, which is completely down.
Okay. Paul Young, head of energy products at the Dubai Mercantile Exchange. Paul, welcome back to the table. Your thoughts on the correction or oil price decline at the end of last week? We're seeing markets open today, now up in Asia, a little bit of a bounce, nothing significant perhaps, but your thoughts on the momentum of the market?
Yeah, hi, Sean. As you say, last week it flattened off a bit towards the end. We had that Goldman Sachs report saying things will be back to normal very quickly. It's not a disaster for the US industry. And probably what spooked the market a little bit was reports that Iran may come back into the fold sooner than many had expected. There's 2.5 million barrels a day. They get up to that anytime soon? It probably looks unlikely to me, but it did spook the market a little bit. But today, our old friends at Goldman, if you like bullish markets, I don't know if you've seen their latest report, but just to put it into context, so when price is $40 back in November, they gave a forecast $65 for July this year, and a lot of people said, no way. The market was still pretty bearish then. Last month, they advanced at $65 into July. They're now saying $70 Q2, $75 Q3, and demand back to 100 million barrels a day in July. So all those peak demand forecasts, if Goldman are right, are looking a bit out of color now.
Well, the Omar Najia, they're catching up with you on your $80 ticket that you called some weeks ago. So Goldman Sachs are following your lead, it seems to me. But ultimately, Omar, question of relevance or not, weak dollar, where do you see that going? Is it important? The dollar seems to have had moments where it's tried to garner some strength, but then drops away again.
Yeah, so the dollar index is a very difficult thing to get right. I still believe that low on January 6th, which came in at 89.2, I think that holds. If not, it should break very, very soon, like this week or next week. But bottom line is, even if the dollar index sets a new low, it's going to be a massive buy. So from that, let's call it 90% now. The low is 89.2%. Let's say it's trading 90% now. I think the next resistance, the next target for it to the upside is 103. So I think everybody is short dollars. And I've said this before, so I think basically the risk is to the upside. I don't think it's got much room to go on the downside. And again, the thing about, remember people always say, but you can't be bullish the dollar and bullish oil, because if the dollar goes up, oil comes down. But remember, look at gold. Gold has gone down the toilet, right? And the dollar's been weak. There is no correlation. Correlations work only at a very fixed time frame, a week, a month, whatever. They don't. It is not true that basically if the dollar goes up, oil prices come down. So you've seen that from gold. Gold has done nothing except drop as the US dollar has dropped. And the other thing, basically, Iran. The US came and said very happily, we are ready for talks. And the EU said, yes, we are also ready for talks. And what did Iran do? They said, talk is cheap. if you want to do anything, you've got to basically, remove all sanctions. And they said explicitly this weekend, Zarif said, no discussion about missiles, no discussion about regional anything. And, that's it. So it's going to be very interesting to see what the US does.
Jose, meanwhile, in Venezuela, in the importing of Iranian products, is that going to grow, do you think? How is it being paid for, or is there any commercial transaction there?
Yeah, sure. There's been a growing recent commercial relationship between Iran and Venezuela. And I think we're going to keep on importing gasoline from Iran, which, for now, it seems to be our only partner in terms of importing gasoline, avoiding sanctions from the US, which has been successful so far, the strategy. And yes, there's we are receiving, goods. Iran recently opened a commercial center in Caracas, from stuffed with Iranian products. Allegedly, I think Maduro is paying back, though. I mean, that gasoline with oil, with gold, and also to Turkey, and that's the other partner of Venezuela. So I mean, but with Iran, I think that the relationship will still go on as long as our refining circuit continues down, which, I mean, I don't think it's gonna come up in the coming months or maybe next year. I don't know.
What is the position of the Chinese and the Russians in terms of the Venezuelan oil industry at this time?
Well, back during Chavez era, China and and Chavez, they developed a strong relationship, basically because Venezuela was plenty of money, plenty of resources, was producing around, as I told you, 3.4 million barrels per day.
Why are they not engaging now to help to recuperate or recover the oil sector in Venezuela?
Because, I mean, the Chinese are not dumb. They very pragmatic, and they want all their money invested here back, and so they're not being fooled anymore. Even if they are not completely gone out of the country, they still have some presence here in terms of Chinese oil companies, but it's not the same level of intensity of the Chinese or even Russian presence here, because I remember one experience having a conversation with some Russian representative here, and he told me like they liked Chavez better than Maduro, and they thought Maduro was weak, or he was dumb, but the level of intensity of China and Russia here has changed a lot. Maybe I think Turkey and Iran became more, they have a more solid connection with Maduro right now than what China or Russia so far. Yeah.
Paul, the question at the moment seems, as we sort of articulated in recent times, is that the oil markets are kind of reaching some kind of a transition tipping point. Do they go down, as we were talking last, with Omar and others last week, that the possibility of a correction down to 55 to 50? We had a little dip last week, but we also had a major ice storm at the same token. It seemed to like not really a week in which to make any judgment upon because it was so disrupted. Now we've got the Iraqis coming out of their deal that they had set up where they were looking for prepayments. We got the talk now with the Iranians coming back, perhaps, whether it's next week, next month. But ultimately, the market feels like it's at some kind of a tipping point transition that OPEC will have to react to. Your thoughts on that?
Well, just on the Iraq story, it's probably a very good example of the reason why oil price benchmarks exist. Use them, don't sell at fixed price long term. And yeah, it could have come off, but anything I've seen where it's fixed price. Remember in Asia, there was a lot of petrochemicals, fixed price, bunker deals in the 2008 collapse. There's always one side that wants to walk. So that's why benchmarks exist. Use them. As for tipping points, Omar mentioned now about shale prices. We're using that headline now, $65 a barrel. That's the price of Brent. Well, it's 64 right now. Brent ran away a little bit last week. It got $2 above Oman and Dubai, so Middle East prices. That looked a little bit overdone. Right now, WTI is $60. You only have to go a year out before it's $55. Continue like that backwardation, and you're looking at, if anyone does want to invest in shale, your ballpark price is nearer $50, and it is $60 now. So maybe flat pro or headline prices need to go another $10 before the people who finance it start looking at it. In all honesty, the most bullish story I've seen this year was from the BP results. BP has less than 100 people working in E&P. I had no idea. Before, if you'd asked me before, I'd say, I don't know, a couple of thousand. This is BP, less than 100 people finding oil. That says a lot. That means the majors are getting out of oil. It means that transition into greener fuels, cleaner fuels, oil is potentially very tight. You need to find replacement 5% a year just to stand still. So if you're bullish long-term oil, there's a lot to take there. If you're still bearish, you can say it's going to be, at least another year before the world gets back to normal. The only one that's really lagging now on the refined products, you'd have to say, is the jet, although the jet kerosene complex has been helped a lot by cold weather, first in Asia, and then obviously now the US. Kerosene is basically jet, but without the additives that allow planes to fly with it. The cracks in Asia now, obviously they're higher in the US. Just looking this morning, gas all up to +9, jet now +6. Remember, that was negative for quite a while. Gasoline is back to about +6, and the 0.5 marine fuel. Right, again, bunker buyers on the 0.5 have to compete with utility buyers. That's at +$15. So margins finally looking quite healthy in Asia again. So you can point to a lot of bullish points.
Yeah.
But it's not going to be overnight, the full demand recovery, unless you listen to Goldman or Omar.
Or Goldman Sachs. Let's go to the survey question as to where it stands today on this sort of outlook forecast that we had from Goldman overnight, where they had raised their Brent by $10, not $1, but $10. They must be watching Bitcoin, with expectation now for Brent to reach $70 by Q2 and 75 in Q3. By Q2 is essentially 5 weeks away. So quite bullish there. But I think most interestingly is not so much the price, of course, but the fact that Goldman are also calling for a return to pre-COVID demand levels of 100 million barrels a day this year, which is way out of the sort of mainstream of outlook. But where is the view in the room on this Goldman call? And your thoughts, Omar, on that, as well as I know when you put out the $80 call a few weeks ago, you were sort of being half in jest, but nonetheless, doesn't seem like a crazy call.
No.
And vis-a-vis, where does demand recovery go to that pre-COVID level in 2021? Do you concur with Goldman's view on that?
Yeah, look, and I think basically for people listening, I don't say things that are quote unquote in jest or just to whatever.
I don't.
What I actually think. If you look at the market now is backwardated, which means basically that the front price compared to the back price is actually higher, right? Which means that if you were to buy a 12-month strip, all of it from, let's say, January to January, the market actually pays you to be long, okay? So as that backwardation grows, all that's going to happen is you're going to get more money that comes into the market. So from the financial side of oil is much larger than the physical side. You're going to see money come in. That backwardation is going to keep growing and growing and growing. It's exactly the opposite of what we had last year when we had a contango, where people basically pay you to store oil. Now the market's paying you to actually buy oil, futures. The other thing to consider is right now you have a level of demand, which is basically, you have two things. You have something I think called actual demand, and then you have something called notional demand, which is stuff that you would do if you didn't have constraints to do with COVID, with your job, with time, with whatever it is. And usually what happens is that actual demand moves up to meet that notional demand further forwards in time. The question is, what happens, if that happens, what happens with supply, if anything? Whether it's supply of air tickets, it's supply of cinema seats, supply of restaurant bookings. What happens if you get that jump and supply isn't there? And why isn't supply there? Because everything's been so decimated that the guy owning the restaurant doesn't want to employ chefs and waiters and all the rest of it, because refineries don't want to produce the stuff until they see that demand. So everybody's going to be waiting. There's been massive destocking. So that's what's going to happen. Come July, everybody, hopefully, is going to be like, I want, and basically what people are going to tell them is, well, you know what, you're going to have to wait. We're going to sell it to the guy who's going to pay $100. And then, just wait a couple of months. Eventually, it's going to equalize. But what you're going to see, I think, is that dislocation between supply caused by that demand moving up and people having destocked everything from products to cinema seats to airplane tickets to routes to whatever it is. So that's what I think is going to happen. You're going to get that dislocation. It's going to cause a price spike, and eventually it meets again and we equalize. But for anybody who's worried about, market is too high and all this kind of stuff, the answer is yes. It's scary, it's whatever, but you can either sit on your hands and do nothing, or you can participate smartly, take your money, go back in, take your money, go back in. I've seen equity moves make 60%, and then I decide take it, and then it goes up 300%. And you can't worry about that stuff. You just got to be like, okay, people are crazy, understand what the market's doing, understand that dislocation is coming, and then you see what you'll do. And that's what's going to take us to $80 WTI. And the more I hear people say no and crazy, impossible, blah, blah, the happier I am. When everybody starts to say, yes, 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 we're going to get there, that's when I start to worry. So for now, I'm quite comfortable.
Jose, the outlook for Venezuela and the region in the new Biden administration, is there optimism that things can finally change in this paradigm for Venezuelan oil industry and for the general relationship with the US, or are you expecting more of the same?
Well, in the coming months, I'm not expecting any real changes, and since the Biden administration has another priorities, local priorities, and all that. Even though Maduro is showing signs of trying to normalize, to try to, get closer to this new administration, showing some sign of goodwill, in trying to, renew the relationship between Caracas and Washington. I don't expect any real changes in the coming months, and basically because Washington wants a political transition here. Even Juan Guaido, the opposition leader that once posed a challenge to Maduro 2 years ago, but now he lost all political capital here, and there's no comfort. There's no real opposition to Maduro right now. Maduro has total grip on power. He controls every strategic sector here, controls PDVSA. You have total control by military over PDVSA. All the strategic sectors in PDVSA, the gasoline. They're involved in many illegal activities here. So this is why I don't expect. And you have the issue of Citgo in the U.S. too, which is controlled right now by the Guaido, Guaido team, which is, who's so far being backed by Washington, but there is no good outlook or positive outlook for the relationship between Washington and Caracas. I don't expect any changes in the coming months.
Okay, let's get the survey result before Paul gets the last word today. Goldman, agree, disagree, 2-1. Omar's happy. Paul, given what we're hearing out of Venezuela, no change there. Given what we're hearing and Omar's view, and that is echoed even by the Oxy CEO, that shale, Oxy, one of the biggest operators in the shale patch, shale is not recovering. And obviously after last week with the ice storm, even more so. The Iran deal with America will obviously take time. OPEC Plus are going to have to start thinking about adding some barrels pretty soon. Would that be your sense going into the meeting next week?
Yeah, I was just thinking the last time, well, certainly I saw you and probably anybody, was IP week in London this week last year. And it was kind of strange. The first sort of couple of days, everyone was like, nah, it's going to be fine. Then by Thursday, Friday, everyone was cancelling meetings. No one wanted to see anybody anymore. Or maybe it was just me, I'm not sure. No, a lot of meetings did get cancelled.
Yeah,
and then we had like that, what I'd have to say, like that disastrous OPEC meeting at the following month where everything collapsed and they all fell out with each other. It's been a remarkable turnaround. You'd have to say the OPEC Plus management has been excellent, first rate. They probably could not have asked for any more. If you had said $60 to $65, even last summer it looked far-fetched. I mentioned the Goldman forecasts. That November when we were $40, they predicted 65. That looked very optimistic then, and now you're asking on the polls $75. I think they'll be sensible but cautious. What's built in the another 500,000 barrels a day from the OPEC Plus group, and we'd have to assume that Saudi will restore the 1 million barrels a day. The assumption that the market can wear that. April might be more interesting. If we are racing towards like $70, there may be more discussion about opening the taps a bit more. So I think cautious for next week's meeting, and if things continue the way they are, maybe open the taps a bit more at the April meeting.
Yeah. That will certainly be interesting to watch. The cautious approach has obviously delivered 60 to 65 on Brent.
Yep.
If they abandon that now, that price might not hold. But if they keep with it, 1 million back from Saudi in April and 500,000 from the rest of OPEC Plus, that's 1.5 million more barrels in April than in March. That's not an insignificant amount, but probably just about demand supporting it. We will have to see. But that's a wrap for today. Omar Najia, thank you as always for your insights. Great. Paul in Dubai and Jose in Caracas, thank you very much for joining us and giving us an update on the situation with the Venezuelan oil industry. Always very important to keep in touch with that story. Unfortunately, it doesn't seem to change. And as a result, Venezuela finds itself in a difficult place. Thank you, everybody, for joining us this morning. Have a great day, and we'll catch up with you later in the week. All the best.
Thank you, Sean.
Thank you.
Thank you.
Thank you.
Thanks, Sean.